What's going on, everyone? Today we're going to be answering and dissecting the topic of can first-time home buyers afford a home in today's market? But before we get into that, you know one thing that everyone can afford? Smashing that subscribe button and giving this video a like. But okay, let's get right into it. Doesn't it feel like if it's not one thing, it's another when it comes to real estate and mortgages? From the low inventory crisis to the volatile mortgage rates and the never-ending story of inflation. What can we expect next at this point? But the question arises, can FTHBs, first-time homebuyers, even afford a home in today's market? Well, in my opinion, I believe it really depends on the financial situation and the overall goal of the prospective home buyer. And what I mean by that is that, yes, mortgage rates are the most favorable right now. And yes, inventory is still lagging, but in my opinion, only strongly prepared first-time home buyers will have success in this present market. For instance, if you have great credit, minimal to no debt, you have a secure paycheck with a sizable amount saved up for down payment, along with the mentality that you will plan to live in the home for more than 5 years at least, then, only then, I believe first-time home buyers can afford a home in today's market. But let's see what the data says. People lie, numbers don't. Okay, picking it up from an article I found on housingwire.com titled, "Can first-time homebuyers afford homes today?" Here's what realtors can tell us about today's market. The article opens by saying, the monthly Realtor Confidence Index is an essential measure of what real estate professionals are seeing in their local markets and how the market is evolving on a monthly basis. The National Association of Realtors research group has produced the index since 2008, a time of turbulence in the real estate market. One such measure is who's entering the market. Since October of 2022, the share of buyers who are purchasing their home without a mortgage has been more than 1/4 of the market. The share is collected in a monthly Realtors Confidence Index and includes buyers who purchase primary homes, vacation homes, and investors. Basically, what the market as a whole has been experiencing since 2022 is a high influx of all cash buyers. And what could possibly be the cause for that? Well, let's keep reading to find out. These all-cash home buyers are happily avoiding higher mortgage rates, which touched 7% in the fall of 2022, before trending down to the current rate of 6.28%. While spring of 2022 saw a similar share of all-cash home buyers, one needs to look back at 2014 before seeing similar shares. And I'll make sure I put a graph so you guys can follow along with the data. Then, mortgage rates were in the low 4% range. In the months before COVID-19 pandemic, the share of all-cash buyers hovered in the teens. While mortgage rates may be one component, they don't tell the full story. So what happened and who is paying all cash for these homes? I'm gonna guess it's a high majority of sellers who cashed in on their equity that spiked in the last 3 years, but what do I know? But let's see what the article had to say. One factor at play is the multiple bid scenario that took place throughout the COVID-19 pandemic. Home buyers placed competitive offers on homes while inventory grew increasingly difficult to find. In March of 2022, sellers received an average of 5.5 offers. Today, the average is 2.7 offers. As buyers wanted to find the perfect property before interest rates rose, they were willing to offer all cash to sellers, so their offer was not contingent on financing. Keep in mind that depending on what market you're buying, sometimes these numbers don't do justice. For example, in San Diego, offers were in the 15 or more range, something to keep in mind. But let's continue. The article states, additionally, buyers migrated to more affordable locations in a low-density area, allowing them to purchase a home with all cash if they had housing equity from their past property. Thus, the typical homeowner who owned their home for a decade had more than $200,000 in housing equity to make a trade. Would you look at that? Turns out I do know a thing or two about a thing or two. Now listen to this. The share of non-primary residence buyers is now at 18% from a high of 22% in January of 2022. At that time, the housing inventory dropped to historic lows, making the environment ripe for investors. Investors joined the market to hold the properties as short-term or long-term renters or even flip the home. Think about it like this. Blackstone just raised $30.4 billion in cash and is waiting eagerly to buy up as much residential real estate as possible. Just kidding. But not really. As these all-cash buyers and non-primary resident buyers are finding success in today's housing market, what is notably lacking are first-time home buyers. Unfortunately, the share of first-time home buyers remains suppressed at just 27% last month. While it's not the high seen during the first-time homebuyer tax credit in 2010, it's also not the historic norm of 40% seen in an annual profile of homebuyers and sellers report. Notably, during the time frame of the first-time homebuyer tax credit, there was significantly more inventory than seen today. Unfortunately, the hope of seeing more first-time buyers in the market this year is due to lower competition has yet to materialize as higher mortgage interest rates have suppressed the share of people who can afford to purchase a home. And there you have it. Unfortunately, first-time home buyers are getting crushed in this present market. Now, like I mentioned, it also isn't impossible to afford a home in this present market if you're a first-time home buyer, but only under the conditions I mentioned, like great credit, no debt, big down payment, and a long-term commitment to living in the home. The article finishes by saying, first-time home buyers need more housing inventory to improve affordability. The low mortgage interest rates of 3% are not going to be seen anytime near in the future. For buyers to afford to enter the market comfortably and sustainably, new construction, office conversions, and remaining existing spaces such as vacant schools could hold the key. Look, bottom line, whether you're looking to buy a house right now or in the future, it's never a bad time to financially audit yourself. So begin by setting a plan and taking action on it. And don't be discouraged if you aren't ready just yet. So if you found this video insightful in any way, then share it with a friend or family member that can benefit from it as well. And like always, thank you so much for tuning in, and I'll see you guys on the next video. And don't forget to subscribe, give this video a like, and tell everybody that they need to start paying attention to their finances.